The next question is that discount brokers like Angel One have been gaining market share as compared to companies like Motilal Oswal, MOSL, which has been an underperformer relative to the industry. What then is your investment thesis for Motilal Oswal Financial Services? Are we comfortable with their lending business? Somewhere around 2019, they had a gross NPA of 9%. How does that compare to IIFL Finance?
Sure. So Motilal Oswal Financial Services is a basket of businesses that are there in the listed company. So one is the retail brokerage business, the other is the institutional brokerage business. They have the mutual fund business, they have the PMS and alternatives, PMS uh, and private equity and things like that. They have investment banking, and they have the home loan business that person is referring to. Overall, the market has been moving, or the discount brokers have been gaining share. So the likes of uh, Zerodha and Angel One and Upstocks and various other discount brokers have been gaining share in terms of especially the new customers signing up and the tech savvy customers signing up. And plus, even from traditional or the older investor base, they are getting market share. On the other hand, what is happening is the traditional brokers, the uh, voice plus digital brokers or phygital brokers as they are called, over there has been a massive consolidation drive that is happening. So small brokers who cannot afford the compliance costs with the increased complexity and uh, increased complex compliance that is to be done, they are increasingly becoming sub brokers of the larger brokerages. So in this consolidation drive, people like Motilal Oswal and all have been gaining on the brokerage side. So that is as far as the retail brokerage goes. So while discount broker has been gaining, these people have been consolidating, and these are one of, I think this brokerage would be one of the brokerages which would be there after the consolidation phase is over. Institutional brokerage, of course, there's no such trend. They are among the big institutional brokers in India. That continues, and again, there the pedigree counts in terms of the number of years they've been covering various companies and sectors and all of that. Uh, they are reasonably large in their mutual fund piece, but more interestingly, their PMS piece is larger, which is a higher yielding business for them. Uh, Private equity has the PMS and the private equity not only gets them the fixed fees but also the profit sharing or carry as it's called. So those are high margin things. So one cannot do a like for like comparison in terms of market cap to AUM, because someone who has a large fixed income kind of AUM versus someone who has a large PMS and a private equity AUM, you cannot directly compare. So that is a very profitable piece for them. Housing finance, again, mixed feelings. So I don't know whether it will be a huge success, some kind of a failure, or a moderate success. I don't know. They have taken corrective actions of the past problems that you have mentioned. Currently, the balance sheet looks clean. They are confident of it and they are pursuing it. The good part is that the founders have their personal wealth tied up in the company and in its schemes. So it's not that they would pursue a business activity even if it does not succeed. So if housing finance shows signs that they should not be in the business, I am sure they'll take the appropriate action as and when required.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.